But the spotlight is also on the chemical sector. Krishnachandra Parwani, who's a chemical analyst at GM Financial Institution, joins us now to talk about the sector and how one should approach that one. Krishnachandra, thanks a lot for joining in. I just want to first understand, before we talk about individual stocks, right? What's the outlook for the sector in FY25? Are you bullish? If yes, what are the big triggers that you see?
Sure. Hi, good morning. See, on the demand front, we have seen some signs of improvement in the polymer additive space, adhesive chemicals, oil field chemicals. So this in turn has resulted in a demand uptick of various bulk chemicals as well. And we have highlighted that the outlook for the agrochemicals is likely to improve in FY25. But a meaningful recovery is yet to be seen. But so the demand uptake in agrochemicals is likely to be on the back of robust grain output forecast. Number two, improving inventories at distributor levels, as highlighted by AgChem distributors in the US and LATAM. And number three, a favorable stocks to use ratio, which is supporting the crop prices.
Okay, all right. Hi, Krishnachandra. Good morning and good to see you. When any particular chemical that you're looking at which has seen either phenol or something where you're seeing that the spreads have likely to have bottomed out and now things will improve from here on?
Yes. So there are various chemicals where the pricing has improved. I'll highlight a couple of reasons. So in fact, what we are seeing in several chemical prices is that they have stabilized, and in certain cases, a couple of factors are pushing bulk chemicals prices higher, like bromine or even phenol. So these factors are a Red Sea issue, congestion at some ports in China. So as a result, a lot of Indian players are facing issues in finding container availability, especially over the last 1 month or so.
Okay. A lot of exporters have been talking about higher freight costs impacting margins, right? And we've spoken about this in the past as well. Is it fair to say that this margin pressure is something that can continue well into FY25, or do you see some respite there?
On the freight cost front, see, if you look at the freight from Shanghai to Los Angeles, that has jumped from around $3,000 to $6,600 or so, which is, and this is just in last 1 month. So for sure, that there is going to be some pressure in terms of the logistic costs. And in fact, what's happening is that if these issues continue for a prolonged period, then we could see some restocking happening to negate the impact of shipping delays. And with the increased demand, there could be further spike in chemical prices. So this situation could be similar to what we saw during June to September 21.
Okay, all right. For the sector on the whole, Krishnachandra, how is the valuation picture looking like? Some of these stocks haven't performed much. We had a big run post-COVID and then the stocks came off the top. But on a valuation parameter, how is the sector currently placed if you compare it with, say, the 5-year average?
Sure. So in terms of valuations, the valuations have not corrected, especially for the larger names, and the reason behind it is that people or the market is factoring in a steep recovery, which is very very likely if the current situation continues and if the agrochemicals play out just like we have highlighted. So yeah, I think valuations wise there is no comfort, but at least if the recovery continues, then there could be increase in the current estimates that the market is penciling in.
Okay, Krishna, thanks a lot for joining in and talking about the chemical sector. Appreciate your time here. Well, we have the markets that are going to be opening in less than 5